Time now for an in-depth look at the market action. We're joined on the line by Dr. Kim Sei-wan, Professor of Economics at Ewha Womans University. Professor Kim, great to have you with us today.
Good afternoon.
Well, let's start with the impact of Jerome Powell being set to continue his role as Fed chair. U.S. President Joe Biden tapped him as the right man to battle inflation and to fuel economic recovery. Some even anticipate a more hawkish approach from Powell this time.
First of all, Mr. Powell's reappointment as chairman of U.S. Fed signals policy continuity in his second term. President Biden's decision reflected a desire to maintain stability at the central bank amid public concerns about high prices for everything from groceries to fuel. After reappointed, Mr. Powell said that he will use Fed tools, monetary policy tools, both to support the economy and a strong labor market and to prevent higher inflation from becoming entrenched. Early this year, Mr. Powell has argued that price pressures reflect bottlenecks from disrupted supply chains, temporary shortages, and a rebound in travel. But Mr. Powell has warned in recent weeks that price pressure could also reflect stronger demand and that overwhelmed supply chains could lead to more persistent inflation than he initially anticipated. So Mr. Powell will make full use of all policy tools to stabilize inflation, which means tapering could be faster and interest rate hike could come earlier than expected.
Well, the NYSE appears to be impacted by the news of a repeat term for Powell. We saw strong starts for financial and energy sectors. Could you please provide your overall assessment of the figures?
U.S. market is mixed between Dow Jones and NASDAQ yesterday. Rising bond yields, expectations for economic growth powered stocks of energy and financial companies, while weighing on the growth stocks, which is basically technology stocks that have lifted the market in recent months. Dow Jones Industrial Average added 0.5%, and the tech-heavy NASDAQ fell by 0.5%. Bond yields continued to rise Tuesday, with investors pricing in more certainty for the Fed's plans to taper asset purchases and hike rates in near future. The yield on the benchmark 10-year U.S. Treasury note rose to 1.665%, up from 1.625% Monday. Asian markets were mixed between Tokyo and Chinese markets. Japan's Nikkei hugely dropped by 1.6% as Japanese companies' business performance weakened and crude oil price continues to rise. But Shanghai index gained by 0.2%, and Hong Kong's Hang Seng Index also gained by 0.7% today.
Well, here in the nation, the main bourse started strong, and the tech-heavy KOSDAQ had some key indices notching positive digits. Will we see this momentum continuing?
Along with rising interest rate concerns in Korea and United States, domestic markets were mixed between KOSPI and KOSDAQ today. Investors became more worried about interest rate hikes by Bank of Korea and U.S. Fed, ongoing inflation, and shortages of raw materials. KOSPI dropped by 0.1%, but KOSDAQ gained by 0.6% in a single day. Among top 20 large cap stocks, SK Hynix, LG Chemical, Kakao Pay, Krafton, and LG Electronics gained in a declining market today. Domestic institutional investors like bank and insurance companies net sold over 590 billion Korean won in the KOSPI market, and that became a major power to retreat the market today.
Now, with authorities imposing tightened lending rules, household credit grew at a slower pace in Q3. Some banks are reportedly even planning to make changes. Do you help us look beyond the figures?
Household debt grew at a slower pace in the third quarter from the 3 months earlier amid tightened lending rules by authorities. According to Bank of Korea, household debt has come to 1,844.9 trillion won as the end of September, up 36.7 trillion won from 3 months earlier. The growth compared with an increase of 43.5 trillion won tallied at the end of the second quarter. The slow growth came as the financial authorities tightened rules on lending as part of efforts to keep a lead on rising household debt, which is frequently said as a major drag on Korean economy's growth.
The government is providing financial compensation to various businesses like lodging facilities, wedding halls, and those in travel-related sectors hit hard by the pandemic. There are other support measures being devised for small businesses as well. Do fill us in on the details and how will it help revitalize the economy in the long run?
The Finance Ministry has unveiled its plan to support micro business owners, including self-employed, in use of tax revenue surplus and national budget. This is regarded as a sort of bailout for small businesses, which were severely hit by the pandemic in terms of their business and financial conditions. While they will have the opportunity of taking out government-leading loans on low interest rates at 1%, actually, the government support package does not include cash grants. According to government, support scale would reach 12.7 trillion won. While the surplus in tax revenue came to 19 trillion won this year, 7.6 trillion won will be initially be allocated to local governments nationwide under relevant laws. The remaining 12.7 trillion won will be used for small business owners. As for the bailout for micro businesses, government says that additional 5.5 trillion won from existing national budget is also mobilized.
All right, Professor Kim, thank you for coming in and sharing your insights with us. We appreciate it.
Thank you for having me today.